Good evening. This is Anita Cordell, and if you're watching this video, there are two reasons. One, I could have sent this video to you via an email based upon our conversation. So this video is going to be all about the pre-approval process and what a lender is looking for. And so if you've talked to me verbally and I'm sending you this video, that is the reason why. The other reason is you could be on YouTube and watching this video on YouTube just to learn a little bit more about the pre-approval process. And so if you're on YouTube and you're new to YouTube, this channel is all about the Kansas City metropolitan area and all things Kansas City, like eating, sleeping, where to live, where to go for entertainment, all kinds of stuff. So that is what this YouTube channel is about. So this video is talking about the pre-approval process and what a lender is going to look for. Okay, so there are 4 different pieces of documents that the lender is going to ask you for when you're getting pre-approved. Now, there is a difference between being pre-approved and being approved, and I'm going to talk a little bit about that in a second. But the first set of documents that a lender is going to ask for are your pay stubs. So the lender typically will take a 1-month snapshot for your pay stubs. And so if you get paid bi-weekly, then they're going to look for your last 2 pay stubs. If you get paid weekly, they may ask you for 4 pay stubs. So it's really looking for like a 1 month's snapshot of your financial income and what you have coming in as far as that is concerned. And the reason why, obviously, is because they want to make sure that you can pay your bills when you buy the property. There's an old saying that I learned a long time ago from my mentor who was teaching me when I began being a real estate agent. And they said, if there is a buyer out there that buys a property, a lender will always say, no pay, no stay. So basically, if a lender doesn't think that you'll be able to pay your bills when you buy the property, then they won't loan you the property. But if you get into a property and you don't pay, then basically the lender will say, you don't pay, you can't stay. It's the same thing with renting. It's the same thing. So if you rent a property and you don't pay your rent, you're not going to be able to stay there, basically. So that is the reason why they look at that snapshot of your income. So the second piece of documentation that they're going to look for is bank statements. They're going to want 2 months worth of bank statements. And basically, it's just the same thing. They want to make sure that you have money to come in and that you will be able to buy the property. Also, if you are getting a loan where there is some down payment that is needed, they want to make sure that you have some reserves to bring to the table that down payment. If you don't have any money in your bank, then they're going to have to talk to you about that. So how will you pay for a down payment if there's nothing in your bank account? So they just want to look at that snapshot as well. Okay, then let's see. Okay, so you got your bank statements, your pay stubs, and then the next piece of document is going to be your last 2 years of your tax returns. So make sure that you keep those in a safe place, and I'm sure your accountant can also get a copy of it if you don't store it in a safe or something like that. But they'll ask for your last 2 years of that. If you're in the beginning of a year like January or February or March and you haven't filed your taxes yet, they'll still want those last 2. But sometimes the lender will say, okay, well, give me 1 and then give me your W-2s, your 1099s, but it's usually the last 2. All right, and then the last piece of documentation is what's called the credit bureau reports. Now, this is where the difference between pre-approval and approval is concerned. So sometimes when you go and call a lender, they're going to pre-approve you, and they'll usually send you a link, and you'll click on the link and you'll fill out all the documentation for that lender. Now, some lenders actually won't even get all of this documentation. They're going to take your word for it, basically, and they're going to give you a pre-approval letter without getting all this documentation. That's a little dangerous and a little risky. But there are some lenders who go through the process of getting and obtaining all of the documentation prior to giving you a pre-approval letter. And that is really a great lender, in my opinion. They're going to ask for all of this documentation up front, and they're going to go ahead and pull your credit. Now, some lenders will only pull one credit report from one credit bureau. I like lenders who will actually do a credit report for all three, and that's basically called a tri-merge credit report. So if you have a lender, they might pull all three, which is great. You don't want to have one thing missing on the credit report that they pull, and they pre-approve you, and then a few days before closing they pull a tri-merge credit report, and then all of a sudden you're not able to buy the home because there was something that was on one credit report that's not on the other ones. And so that is a tragic situation and a tragic story that you don't want to have occur. But there are some lenders that will go ahead and give you a pre-approval letter without pulling the tri-merge credit report. But if you have a lender that is going to pull all this together, you'll be a lot stronger of a buyer. So anyway, I just wanted to explain all of this. Again, if you're watching this from a link, then you and I probably have spoken, and this is just explaining a little bit about the pre-approval process and what your lender will want. If you're watching this on YouTube, please like this video, subscribe to my channel, and click that bell so that you can be the first to learn about all that I post. Have a wonderful day. Remember, to buy or sell, call Anita Cordell, #AnitaHome, because there's no place like home.